Scalable Capital is one of the most popular investment platforms in Germany, but it isn't just a broker app anymore. So in this Scalable Capital review, let me share exactly what they offer, how safe is Scalable Capital, and what I would watch out for. By the way, if you're new here, my name is Ahsan, and on this channel we discuss how to build wealth in Germany. Scalable Capital is a Munich-based fintech that's been around since 2014. In the early days, it was mainly known as a robo-advisor. The idea behind that, instead of going to a traditional bank and paying for an advisor, you'd answer a few questions, get matched to a risk profile, and your money would be invested into a diversified ETF portfolio automatically. But over time, they have expanded considerably. They launched their own broker and kept building out managed investment site with more strategies. Then in 2025, Scalable Capital officially became a fully licensed bank, Scalable Capital Bank GmbH, supervised by BaFin and the Bundesbank. And now they have over 1 million clients and more than 40 billion euros in client assets. Essentially, there are two ways of using Scalable Capital. The first approach is self-directed investing. You choose your own ETFs, funds, stocks, and crypto ETPs. You decide what to buy, when to buy, and how much risk to take. Scalable just gives you the platform to do it. The second is managed investing, which Scalable Capital calls Scalable Wealth. Here the portfolio is built and managed for you. You pick a strategy or they help you choose one, and then it runs automatically. So in plain terms, the Scalable Broker is for people who want to invest themselves, and Scalable Wealth is for people who would rather have a more hands-off approach. Most people watching this channel are probably more interested in the broker side. So let's start there. This is what most people know Scalable Capital for. With a broker, you can invest in ETFs, stocks, funds, crypto ETPs, derivatives, and other securities. And you can set up savings plans starting from just €1. Now, compared to traditional banks or insurance providers who provide expensive products or bind you in long-term contracts, neo brokers like Scalable Capital make things more flexible and cheaper for beginners. So instead of complex contracts, you can open an account online, pick an ETF, and set up an automatic monthly investment within minutes. It happens automatically every month without you having to do anything. This is exactly for people who earn a salary, want to invest regularly, and don't want to manually buy stocks and ETFs each time. On fees, there are currently two main models. With a free broker, there is no monthly subscription. Individual trades on EIX and GetX typically cost 99 cents. Some ETF purchases can be free under specific conditions, particularly selected prime ETFs above a certain order size, and savings plans executions are free. So if you're only doing a monthly ETF savings plan, the free broker is honestly already enough. You don't need to pay anything because Prime Plus costs €4.99 per month. With it, trades above €250 on GetX and EIX have no order fees. Below €250, it's still 99 cents. You also get some extra features like lower crypto spread, better credit conditions, and the ability to spread your cash across multiple bank partners for higher deposit protection. I think if you're a passive ETF savings plan investor, free is probably fine. If you're making multiple manual trades a month, Prime Plus can start to make financial sense. But don't pay €4.99 a month just because it sounds like the premium option. Run the numbers for your actual usage first. One more thing worth saying here. The fact that you can trade stocks, crypto, derivatives, and leverage products on the same app doesn't mean you should. For most people, especially beginners, a simple ETF savings plan is good enough. The risk with modern investing apps is that they make investing easy, which is good, but they also make over trading easy, which can be costly. So if your goal is long-term wealth building, use the platform as a tool. Don't let the app turn you into a trader. Please hit the like button if you're getting value from this video, and let me know in the comments if you had any bad experiences with Scalable Capital. If not, then even a thumbs up emoji in the comments helps with the algorithm. Now, Scalable Capital is the managed side of the platform. There are different strategies to choose from: globally diversified ETF portfolios, ESG focused options, an all-weather strategy, mega trends, value and dividend approaches, and many others. The right choice depends on what you're trying to achieve. The benefit of Scalable Wealth is convenience. You don't have to pick every ETF yourself, and you don't have to rebalance manually and make small adjustments over time. This is useful for certain people who understand investing is important but just don't want to build a portfolio from scratch or manage it themselves. The trade-off is cost. Some scalable wealth strategies show portfolio management and trading costs in the range of roughly 0.49 to 0.75% per year, depending on the amount invested, plus the underlying ETF costs on top. That's still considerably cheaper than most traditional bank products or actively managed funds, but it's more expensive than buying one or two ETFs yourself through the broker. So the real question here is whether you're willing to pay for the convenience of having someone else manage your funds. If you're comfortable setting up a simple ETF savings plan yourself, you probably don't need managed investing. But if the choice between staying overwhelmed and never investing versus using a managed solution with reasonable fees, a managed solution still beats doing nothing. Scalable Capital also has kids investment accounts where parents can invest on behalf of their children. You can either manage the portfolio yourself through the broker or use Scalable Wealth to have it managed automatically. This is great for families in Germany who would rather put money to work in an ETF portfolio for their child instead of leaving it in a low interest savings account. And because the account is in the child's name, there can be tax advantages depending on the family situation. But this isn't just a cute feature. If you invest in your child's name, that money legally belongs to the child. When they turn 18, they generally get full control over the account. It can also have implications on taxes, health insurance, and other family-related areas. I have a detailed video on how to effectively use that account. I'll put a link below the subscribe button. Now, because Scalable Capital is a bank, they have launched a credit product where you can borrow money against your securities portfolio, essentially using your investments as collateral. The current advertised rates start from 3.24 euros per year on Prime Plus and 4.24 euros on Free. These are subject to conditions. So on paper, that can look attractive compared to overdraft interests or consumer loans. But please be careful here. Borrowing against your investment portfolio is not free money. If markets fall, your collateral value falls with them. If you use borrowed money to invest more, you amplify your risk. And if you don't fully understand what you're doing, this can go wrong quickly. For most people watching this video, my take is quite simple. Don't use credit to invest. Focus on building an emergency fund first, pay off high interest debt, get a solid investment plan running. Understand your own risk tolerance, and only after that, if ever, should you be thinking about securities-backed credit. For experienced investors who need short-term liquidity and already understand the mechanics, Scalable Credit might be a useful tool. But for the average person, treat this as an advanced feature that doesn't apply to you yet, the overnight account. This is one of the more interesting recent additions. Scalable Capital now offers overnight savings account, essentially a target scale, currently paying 2.5% variable interest per year at the time of making this video. The interest is paid monthly and there is no minimum deposit, and you can access the money daily. It also has its own IBAN number. That's pretty useful for people who keep cash sitting in their broker account while they decide what to do with it. But remember, a broker cash account and a proper overnight savings account aren't necessarily the same thing. According to recent updates, the overnight account is separate, and if you're an existing customer, you may need to activate it yourself in the app, which can be a good or a bad thing. With Prime Plus, Scalable Capital can distribute your cash across up to 4 partner banks, which can mean up to 5 times 100,000 euros in statutory deposit protection, depending on how it's distributed. For non-Prime Plus customers, cash may be distributed across banks or allocated to money market funds. That distinction matters because a bank deposit has deposit protection of up to 100,000 euros per client per bank. A money market fund is a security, so it's protected as a segregated asset, but it can fluctuate and it works differently from a standard deposit guarantee. So when you're looking into this, also look at how your cash is actually being held. For most people with normal amounts, this probably won't be an issue. But if you're keeping a large emergency fund or savings for a property purchase, you should understand the structure before assuming everything is covered the same way. As Scalable Capital is a regulated bank supervised by BaFin and the Bundesbank, with this regulatory layer, Scalable Capital is not just some startup operating under a third-party license. Securities like ETFs, stocks, and so on are generally treated as segregated assets. That means if Scalable Capital ran into financial trouble, your securities should not become part of their insolvency estate. They're yours, held separately. Cash is different. It depends entirely on where it's held. Cash at a bank has statutory protection allocation up to 100,000 euros per client per bank. Cash in a money market fund is treated as a security protected differently with slightly different rules. So don't mix these up. And investment risk is still your risk. If your ETF drops 30%, that's market risk. It has nothing to do with whether Scalable Capital is a safe broker or not. So the Scalable Capital platform might be too feature rich for some people. If you open the app as a beginner and you see stocks, ETFs, crypto, derivatives, credit, private equity, managed funds, and many more things, it can be overwhelming and it can push you towards product you don't actually need. The fee structure also takes some effort to understand because there are so many things to consider. Free or prime, EIX, GetX, Zetra, order fees, spread costs, crypto fees. You need to understand what applies to your actual case. Free trading doesn't mean everything is free. Customer service is also a weakness. This isn't unique to Scalable Capital, but if you want a personal advisor or fast phone support, an app-based broker does feel frustrating at times. And not every product is suitable for every person. Derivatives aren't for beginners. Crypto ETPs carry high risk. Private equity can lock up your money. Even themed portfolios like megatrends are considerably more concentrated than a simple world ETF. The platform being good doesn't mean every product inside it is right for you. That said, Scalable Capital is genuinely one of the strongest investment platforms available in Germany. For ETF savings plans, it's low cost and beginner friendly. If you want to sign up with Scalable Capital, please use the first link in the description or this QR code. It won't cost you anything and will help in supporting this channel. Now, picking the right investing platform is just the first step. Making an effective investment strategy and learning how to use the platform are also important as well. So in this video, I share exactly how to use Scalable Capital app, and in this video, I share how to invest your first 100 euro.